Good evening and welcome to the FITT Show. Financial information for today and tomorrow. I'm Bobby Kinzer.
And I am Thomas Doty.
And we here every Thursday at 8 p.m. And our primary purpose is to help people to gather information so they can make better financial decisions with their portfolios and their investments so that they can live a better life. Welcome, you all. It's so great to reach out to you again. This week we got a very interesting show. We've been talking about investing for the longest. We have several different shows, but today we're going to get a little bit more detail and talking about how to research and buy stocks. Yes, we talked about the macro level about investing and picking a stock, the fundamental analysis and technical analysis and other factors that contribute. But today, we're going to show you how to apply those into actually picking a particular stock. So with that, just want to remind you all to click on the like button, and YouTube viewers, please click on the subscribe so that we can actually expand our bandwidth and viewership. It's so great to be here. Dote, how you doing tonight?
I am doing fantastic.
You're looking absolutely marvelous, Dote. So let's talk a little bit about this subject today.
Okay, so you finally make the decision to jump into the stock market. You know, you've been watching the market and you've heard about how much money people are making. You've seen it grow. You know, we've been in a bull market for a long time. If you've been listening to our show, you've heard me talk about some of the stocks I've had great success in. Bought a stock called Upstart, 5th of August, at $133. It closed today right about $380. Or I bought Microsoft a little less than a year ago at $222, and it's about $300 now. And I currently own about 12 stocks, and 10 of those are doing really well. I actually have 2 losers, which is to be expected. And the thing to know is it's not that I'm a guru or I've got some special touch or something like that. But in this market, the way the market has been going, everybody's making money who's invested. The only people who aren't making money are people who aren't invested in the stock market. It's pretty tough to pick bad stocks in this market. So I say that to say you don't need any special skills. You just need the time, put the time and effort into it, and you can pick some pretty good stocks in this market. Now, we don't expect it to continue to go up. I mean, only you can't think the stock market's going to go up forever because it's not. But we've been in a bull market for a long time. And if you haven't been invested, you should have been, because you could have made a whole lot of money. And even if you invest and the stock market goes down, over the long term, you will still do quite well.
Well, Dope, for a person like you who takes more risks than most people, it may sound, very easy and simple to want to get into the stock market. But I have taken a lot less risk, but I realize that I have missed out on greater returns. However, I did increase my earnings and I was able to sleep very comfortable at night. But this is the issue. Whether you have a high risk tolerance or low risk tolerance, I hope you have come to the realization from listening to me and Doty that the benefits of being in the stock market are much greater than not being in the stock market. We discussed the importance of being in the stock market many times. So today we're going to provide you with more specific details on how to research a stock and select a stock that actually meets your specific needs. So there's a lot of factors that go into researching and buying a stock, but we're just going to give you the FITT Show approach to researching and buying stocks. So, Dope, let's begin with the first step in researching and buying stocks.
Okay, yeah, and as we always talk about, you have to assess your financial goals. You have to look at how much money you can afford to invest. And again, that's money that you won't need in the short term. Obviously, you don't want to take money that you need to pay bills or money that you need for a big purchase within the next year or two, because we always believe in investing over a longer time horizon. We're not looking for day traders. We're not looking for any get rich quick schemes. We're looking to invest consistently over a long time horizon, and we think you can be pretty successful in doing that. And the third thing you have to look at is your risk tolerance. We've always talked about that. Bob is a lot more conservative than I am, and Bob has a daughter in college. He's still paying at college tuition. All my kids are finished school. I have a healthy pension, Social Security, so I have enough money to live on. So I can take some risk and be a little more aggressive in my investments. And as we've told you before, no risk it, no biscuit. The more you risk, the higher your return. By the same token, the more you risk, also the more you can lose when the market does make a correction or goes the other way.
Yeah, Doug, just want to say hello to our wonderful viewers out there. My ex-co-worker and good friend, Jay Drury. Hello, Jay. Always good to see you checking us out, my brother. And Modestine Johnson. I love that name. And check this out. My man, David Noel. Now, David's real nickname is Fish. That's what I know David by. He played with me my first year in Scotland. So David is watching all the way from Scotland. So thank you for checking in, you all. Oh, my man. And we got my man, Dennis Jarman, one of the most renowned businessmen in the Washington, D.C. area, though. He's had restaurants and businesses, telecommunications business. He's just an awesome dude. He said, Robinhood has been an excellent experience for me. Wow, Dennis. So you out there in the market. Good deal. Dope. Want to talk about now just a few of the factors to decide which stock to invest in, because we can talk about investing in stocks and things like that, but how do you know which stock to actually put money into, which stock to buy shares? And we just want to give you a couple of ideas. One is do your own research, like the news. There's information that comes across in the news about a company that is doing well or a company that is just new on the market, up and coming. And then there's stock letters. We talked about that. There's magazines and there's TV shows. We've talked about those. Those are different things that gives you some ideas on, the kind of stocks or companies that you can invest in. And then also another one is a product that you use. If you use Colgate toothpaste all the time and your friends and your kids and everybody do, then maybe you should look into that, because not only can you own the product and brush your teeth, but you can own a piece of the company. And I think they're under Procter and Gamble, and they got so many more products like Tide. I think they got Crest, really, and just more products. But look at a product that you're using, but go and look and check it out and see how the company is doing. Just don't take it for granted because you're using it, but really look at it. Then you can also see a trend developing out there on certain companies that you might be in tune to. Like, for instance, there's the trend that was happening with the electric cars. Right now, that's the big thing. Tesla's leading the way, but now General Motors just getting ready to create a whole new plant just to build electric cars. Ford is getting into it. So all the other car makers are getting into it. You might look and see some trends. Go and look at the company. We're going to give you some of the ways to go and indicators and factors to look at when you're going to check out the viabilities of these particular companies. Then there's your company that you work for or its competitor. Your company. Your company might be publicly traded too. Why not invest in your own company? You invest in it going in every day, working for them. Why not own a piece of the company? So, or the competitors to your company, and if they doing well, why not? And one other tip is this: stock tips. I used to get stock tips from my coworkers, and like to caution you, you just can't take it from every coworker, but I took tips from coworkers that I know that make money. And that's one of me and Dote's number one rules. Do not listen to a broke person. First and foremost, do not listen to a broke person, but a friend or colleague.
Yeah, definitely. Do not take advice from somebody that's not rich. That's for sure. Okay, so let's say you go through some of the items Bob just discussed, and you pick a stock. So for our example tonight, we're going to use McDonald's, and we decided to invest in McDonald's, or we decided to do some analysis on McDonald's to see if it's worthy of our investment dollars. And there's a couple of different places you can get information from. There's Yahoo Finance, there's Standard & Poor's. You can use a bunch of the Value Line. There's a bunch of different places you can get information. And what you need to do is get that information, get it in front of you, and then do some analysis. And that's exactly what we're going to do. We're going to look at a stock sheet and tell you the items we feel you should focus on, things that might lead you to look for more information, or help you decide whether or not you should buy the stock. So, Bob, why don't you put the stock sheet up, and let's start talking about different ways to look at it.
I thought it was up. It's not up?
Yeah, okay. I'm sorry. Yes, it is.
Okay, good.
Okay, so first thing you see at the top, we have it highlighted. It's recommendations. And that's typically a consensus of analysts who follow that particular stock. And they give you their opinion on how they feel about that stock. In this case, the consensus is to buy, which that's usually a pretty good indicator that it's a pretty good stock. Some people think it's worth investing in. You may see things like hold, which means if you have it, you don't want to sell it, but you don't want to buy more. You may see a recommendation that says sell, which obviously it means you should get rid of that stock. You may also see strong buy or very bearish, which means you should get rid of it immediately. But that's part of the analysis you need to look at when deciding whether or not you're going to buy stock. That's kind of the first thing you see. And if you see something that the most analysts are not very bullish on, typically you don't want to invest in those kind of stock. You'll get some people who say, well, I'll be a contrarian and there's a reason. But no, if the consensus of analysts are telling you to stay away, to hold or sell, that's probably not something you want to put money in.
So just want to let you all know, now there's different kind of stock reports, but most of them look like this, or they provide all the information that this one is providing, but it may not be in the same order. But if this same information is on all stock reports and stock sheets. So this particular one is from Standard & Poor's. Now, some stock reports you have to pay for to get more in-depth information. And there's some that you don't. They don't give you as much information, but it gives you a lot of the information that we are actually highlighting to show you, like Yahoo Finance, that doesn't cost. So keep that in mind. So the next item is obviously you want to look at the price, right? You look at the price, and this report is the most current report, and this is as of October the 8th, 2021. And it's going at McDonald's, believe it or not, it's going at 240 as of the 8th, $247.70. So the market was up today, and it'd be pretty interesting to see what McDonald's is doing today. But this gives you that information. For instance, so actually the market was up today, but believe it or not, McDonald's stock was down to $244. That's interesting. So that's one other thing, an item. You definitely want to look at that price.
Right. And that's going to help you determine how many shares you might want to buy. You know, when something's a little more expensive, up to 247, you may not want to buy 100 shares. That's putting 24,000. You may only want to buy 50. So that's, as Bob said, that's one of the items you want to look at. The next thing you want to look at is the 52-week range. And that's one of the indicators that's going to tell you the volatility of that stock or how it's moved over the last 52 weeks. You can see it's going between 204 and 248, which, again, the market's been moving pretty well the last 52 weeks. So that's a pretty good indicator that, yeah, it's been moving with the market. It's doing okay. And again, that still fits the criteria of something that you might want to consider.
Hey, dope. I got a comment from my man Dennis Jarman, right? Dennis said he's looking at Nvidia, Netflix, and your stock, Upstart.
Upstart's a winner.
Dennis is on it. Then he said, in today's financials like Goldman, Bank of America, Dennis, way to play the market, man. The next thing, though, is to look at the highlight is the price to earnings ratio. And this price to earnings ratio is 27.77. And what that means is the price is the number of outstanding shares times the earnings per share. So this is basically saying that McDonald's is selling at 27 times more of its price. So, I mean, that could tell you, depending on the industry, that could be a positive, or depending on the industry, it could be a negative. Depends on what the industry price earnings ratio is. But that's what that is telling you.
And the next item is beta. We've talked about this before. Beta is another indicator of the volatility or the risk inherent in that stock. In this case, the beta is, what's that, 0.83? I can't quite see it.
0.63.
0.63. And that, we say one is an item that moves directly with the market. A higher beta means it's more risky. A lower beta means it's less risky. So again, depending on your risk tolerance, you may want something as one is going to move directly with the market. Something below one is going to be less risky than the market. So depending on where you are with your risk tolerance, this would be less risky than the overall market. But again, less risk, less reward. So as long as you're okay with that, and that fits your criteria for risk, then this beta, again, is okay as far as an investment possibility.
And beta is a very important indicator to look at, because, like Doe is saying, and it's also another indicator. Like, remember, if it's at 1 point, it's at 1, and if it's over 1, it tells you the volatility, and if it's below 1. But it also tells you about future cash flows, by the way. If it's up, it's giving you an indicator of future cash flows. But that doesn't mean nothing. But it does, because at the end of the day, it depends on how they're spending their cash. The next item I want to talk about is, if you look at the left side of this sheet, top left, is the 10-year invested 5 years ago. So this, $10,000 invested 5 years ago. So this is saying, if you invested $10,000 5 years ago at McDonald's, it would have grown to $21,901. And that's basically an average of about 14% a year. That the return that McDonald's, and that's a great return, you all, because I mean, just look at this. You doubled your money and more. So that's a very important another statistic to look at.
Yeah, and Bob just said you doubled your money with a beta is 0.63, which is not very risky. So that's a very, very good investment. I'll take 14% every day of the week. The next item we want you to look at is the analyst risk assessment. Again, that all ties in with the beta and how risky it is. And this one is considered a medium risk. And as we've always talked about, a medium risk, 14%, you get something a little more risky, you're probably up around 20%. But this is going to tell you how the analysts feel about the risk involved in investing in this stock. Again, take into consideration what your risk tolerance is and that will determine what you're looking for here. You might be looking for something that's high risk because you're trying to reap a high reward, or you might be looking for something that's low risk because, as Bob always says, you want to sleep well at night. McDonald's has a medium risk, which coincides with its beta being less than 1. And again, it fits the criteria of a stock that you might want to invest in.
So under these risk assessment, we have the revenue and earnings data, right side column. And the revenue is just that. It's how much money they've been bringing in, how much sales they've been having. And this is based by year, by quarter. And as you can see, you start from 2017, to far right corner, they were bringing in revenue of 22 million. That's millions, by the way, $820. And as you can see, over the past 6 years, it's increased to. They've been bringing in good, steady revenue. That's what this is telling you. If you look at the projected revenue of 2022, they're expecting higher revenues than they had over the past 6 years.
Next item is highlights. Again, this is going to vary by stock, but again, it gives you very good information about what the company's doing. This talks about what they project their revenues to be, which is very good information when you're thinking about investing in a stock. And if I'm investing, I'm going to read all the information that's available in highlights, because you may find something there that tells you maybe this is not a stock you want to invest in, or it may reinforce the good feelings you have about that particular stock and make you want to go ahead and pull the trigger. But you have to take the time and read the information that's in highlights, because it can help you make your decision.
And it's good information. I mean, it gives you some foresight on what's going on with the company, what most people don't do, and they just jump in because somebody told them about a particular stock, but they didn't realize there's other information. As we always say, you all, information is power. And that's all we try. We know this may be a lot, but we're not talking about you should be aware of everything in the sheet, but these are certain areas that you can look at that can help you. And you don't have to be you don't have to have no MBA. You don't have to have no degree to understand finance. A lot of people are feared because of it, but it's not, you all. It's just understanding what the information is telling you. And that's the key to really being able to make the best. All you want to do is be able to make the best decision that you can with the information you have. And that's why we're bringing this out. The next is the business summary. Now, the business summary, it's even more, it's giving you what's going on within the whole corporation and all the franchises of McDonald's. And like for instance, there's one that talks about the financial trends in 2020. It says the global comparable sales declined by 7.7 globally, the trends, but yet McDonald's was up. And it was mainly due to the negative impact of the COVID pandemic. We all knew that. And this followed a 5.9% in 2019 that marked with 5 consecutive year comparable sales growth. So after that, they've had consecutive growth increases. So this is kind of things that you see in the business summary. It breaks it, just gives you a wealth of information for you to be on. I think actually I piggybacked on yours though, but go ahead with the company financials though.
Yeah, and again, this is something obviously near and dear to my heart with my finance background. But you don't have to be a financial genius to take a look at this. And what you're looking for when you look at the financials, you're looking for trends. You're looking for things that look out of place. It's like the old Barney, things that don't fit in with the others. And there should be a reason if something, some particular financial item is totally out of line with the others, and you may have to find out what that is. But in McDonald's case, most of their financial analysis or most of their financial information is completely, it makes sense, it follows a trend, things are in order. you don't see anything that's really outlandish or any big dips or any big drops or things of that sort. So again, you don't have to be a financial expert because the items are pretty self-explanatory: revenues, income taxes, cash, current assets. Those are all things you can relate to. And if you can't, just Google the item. It'll tell you exactly what it is. And you look and see. It's, cash and assets are usually good. Debt and liabilities are usually bad. I mean, it's not brain surgery. So you look at those things and you look for companies that are going to have a good cash base and not have a lot of debt. Okay. And those are the kind of things you look for as you look through the financials, just to get a feel, to make sure things are in line with how they've been, that there is a trend, that there's nothing going on that doesn't make sense.
Hey, Dope.
Yes.
But as a head of an accounting department of a Fortune 500 company and a CPA, when you look at their financials, what from somebody with your expertise, what would you see? What do you see in this?
Yeah, I see a very stable company. That's what I see, and which is what they are. It's indicated by their risk analysis being medium, their beta being below 1, their consistent sales, solid cash. You don't have to worry about them going bankrupt. It's just a very, very solid company that has done real well and will probably continue to do well. That's what I see.
Great. Hey, my friend Dennis says, also watch the Squawk Box starting at 6 a.m. every weekday for valuable information from CNBC. Thanks for that tip, Dennis. Next, we want to look at the sub-industry outlook. And with the I love this. This, to me, I just like this the most, though, because it's actually comparing itself to all its competitors, which is a sub-industry outlook. And as you can see highlighted here, I said, with the return of seated dining and amid the vaccine rollout, we see a steady improvement in customer traffic. It's accelerating in 2022 on strong pent-up demand across the industry. Amid the pandemic, several restaurant companies successfully pivoted their off-premise, that's takeout, menu offerings. However, we think more at-home meals are consumed as restaurant prices are rising faster than grocery stores. Wow. And takeout prices. Also, we think consumers are choosing to spend more on non-food experiences. This is kind of information that you find in these stocks reports, man, that is valuable. I think that's so key. So, Dope. Then it gives you the actual chart of some of the statistics from its major competitors. As you can see, the top column is McDonald's, and then its major competitors, you got Chipotle, Darden. That's like Darden is
Olive Garden,
and a whole bunch of other restaurants. Right. Then you got Domino's Pizza, and you got Starbucks and the Yum brands. And as you see the column I highlighted, it's just showing you the 30-day price change percent and the 1-year price change. Little things like that can tell you the movements. And if you look at Chipotle, sometimes looking at this, you might see, wait a minute, maybe I should be, buying stock in Chipotle instead of McDonald's, because you look at Chipotle and look how well they're doing. They are killing, But this is the type of information that we want you to be aware of when you look at researching a stock.
I guess that's your DC accent, calling Chipotle. But anyway.
What is it called?
I'm just picking with you. Let's keep going.
No. You ain't sliding like that. I'm talking in Ebonics. Keep going.
Okay, after we talk about the stock, the next thing we want to talk about is executing the purchase. That's what we're gonna. Oh, that's.
Yes. So executing the purchase. One of the first things to actually you need to determine which broker you will use. Now, it can be online or through an actual physical broker. We suggest discount brokers firms which bypass using a broker like E-Trade, Fidelity, Vanguard. These are online um, companies, brokers that you can actually purchase your stocks through. And you need to also consider um, how you're going to fund your brokerage account, because you just can't call up and say I'm going to buy a bunch of shares. You actually have to put money into a brokerage account, which normally you link it to your bank account, and you can then transfer money from your bank account into a brokerage account. And then when you want to purchase or sell, you just go through, well, if you want to purchase, excuse me, you go through your brokerage account, but you got to fund the account either by sending them a check or by um, linking it to your actual bank account.
Yeah, and typically you have to have the money there to make the trade. Officially, you have to have the money there when you settle, which typically is 2 days after the buy or sell. But it's probably smart to have money in that account, so when you find something and you're ready to buy, the money is there and ready to go. And then you have to decide how many shares you're going to buy. And again, we talked about McDonald's price being around $245, let's say. So 100 shares would cost you $24,000. 50 shares would cost you $12,000. And with some of the brokerage firms Bob talked about, you can buy 20 shares of McDonald's or 14 shares of McDonald's, and there's no special charge like it used to be. And you do it online through an app, you pay a very minimal, if any, brokerage charge, as opposed to buying it through a particular broker. So once you've got the money in your account, you're ready to make your purchase, decided how many shares you want to buy, then you have to figure out what you want your order type to be. And it's typically two major ways, two major types there. You can place a market order, which means the stock will be purchased at whatever price is going on in the market at that particular time when you place the order. Or you can set a limit order. And for example, let's say we wanted to buy McDonald's tomorrow. I can actually put the order in to say, I only want to buy it if it's at 244 or less. And once it gets to that point, then the sale will be executed. So every order I've ever placed has always been at market because, again, I'm not a day trader. I don't have any special information that tells me when I want to buy a stock. When I decide to buy a stock, I put the order in, buy it at market, and go about my business. And typically it takes 2 days for it to settle, which means that's when it officially becomes your stock and the money's transferred and the deal is done.
That's good information, Dope. I'd like to say hello out there to our wonderful, loyal viewer, Garnett and Modestine, FDIC's finest. And we got a little mixture of all kinds of people that be on our show, Dope. And we're so thankful for y'all viewing. All right, Dope, let's bring it on home. It's about that time. So, do you see my summary sheet, Dope?
Yep.
Great. So let's just start with number one. We say this all the time, and I know you're probably tired of us riding this horse down the mountain, down the valley, and up the other side, but you need to make the move to invest. I mean, it's not the end all, but if you want to get ahead and try to grow wealth, you need to be consider investing in the market, the stock market.
That's for sure. You're not going to build wealth in a savings account. Trust me on that. Next thing, determine the criteria you are seeking. If it's long-term growth, if it's dividend yield, and consider the volatility and the risk. And we didn't talk much about dividend yield, but thinking back on McDonald's, their dividend is about 2.3%. And even if you buy the stock and the stock doesn't go up 1 penny, you still make 2 point whatever percent in dividends. Which again, if you're looking at savings accounts, they're paying less than 0.5% right now. So, you get like 5 times your investment just in dividends, plus there's going to be some market growth. So look at your criteria, figure out that you're investing for the long term, understand your dividend yield, understand your volatility, and go at it.
Next, review the stocks via the stock report, or as they call it, the financial sheets and more information. But it's a stock report or a stock sheet. We showed you one particular one from Standard & Poor's. There are other ones. Like I said, they all may be designed a little differently in order of the information, but they all primarily have the same information that we showed you. It's very important to use those stock sheets when you're thinking about purchasing a stock, or if you already have some stocks, just to purchase them and understand, should you be holding them or should you be selling them? Or should you be buying more? And this information is king, you all. We can't stress it enough.
Yeah, and buy a stock that meets your needs. We talked last week about having conversations with other people and getting information from other people. Obviously, people who are smarter than you and who have done well in the market. But what fits you may not fit someone else. Like Bob and I would probably very seldom buy the same type of stocks because we have different criteria, we have different risk levels, but we both make money in the market. And so buy something that fits your risk level, your time horizon, your volatility level, and you should be comfortable with that purchase. And it should be something that you can stick with over the long haul.
And lastly, complete the transaction. That's actually determining, what vehicle you're going to use. Is it an online broker? Is it an online broker? Is it a physical broker? You need to fund your brokerage account, and you need to choose which market order type that you plan to use. And that way you can actually, get started and making it happen.
And finally, I'll just say, there is a lot of information to read, but if you think about, even if you're just buying 50 shares of McDonald's, that's $12,000 you're investing. You should be able to take half an hour to an hour and scour through that stock report in detail to determine if that stock is worth your $12,000 investment. It does take some time. And as Bob mentioned, you may look at McDonald's and you may see a competitor that's doing better, that has better numbers. So you grab that stock report and you compare the two and then determine which one you want to invest, because you want to be in a food industry. You want to get into the best possible situation. And you may find one that has higher sales growth or higher earnings per share or better dividend yield by looking at the competitors. Take the time, invest the time before you invest the money, and you should be able to make a pretty sound decision.
Hey, Doug, we have a question from Renee Nash, and she said, what apps should you use to purchase stocks? Well, Renee, the FITT Show, we do not endorse products. We only use sometimes names just as examples, but we're not wedded or trying to promote any one particular item. But I mean, there's many there's many apps out there that you can use. A lot of people use Robinhood, what's the other one? Stash, Acorn. There's a lot that are out there, but this is the only thing with apps. Apps don't provide you with a broker who is licensed and could give you more advice. So you're basically on your own when you're out there on the app. So just be careful when you're using apps. Make sure you did all the things we mentioned, if you're just using those apps, because apps, you don't have a registered representative that you can hold their feet to the fire if they informed you wrong, or you just don't get the benefit of having someone to talk to who's experienced that works for an actual brokerage firm. If it's a physical person. So that's all. That's what I have to say about apps. Though, is there anything you'd like to add?
Yeah, I personally use Fidelity for the bulk of my investments, and that's a full service broker, but they also discount because for my transactions, I don't pay a fee because I do it myself, not through a broker. I also use Robinhood. That's what I use for my Bitcoin. It seems to work okay. The thing about Fidelity is you can ask them for information. They do have educational information on their website about investing in retirement, Social Security. They have all kind of education materials, and I'm sure Vanguard, Charles Schwab, E-Trade all have the same type of information. So all of those are good. They're all very competitive, and you're going to find they all offer a similar set of attributes or qualities because they're competing with each other. But I personally feel like it's good to have a relationship with one where your money is, you feel safe with your money being there. So when you are ready to make a transaction, you don't have to move money from this account to that account and wait for it to clear before you can, do a sale. So that's just how I handle my personal finances.
And so make sure it's clear what Doe is saying, because Doe, when you say use Fidelity, that's not an app. You're using.
No, I use a Fidelity app to make my transactions. Yes, it is.
Oh, okay. So Fidelity does have an app too. Wow. Okay.
Of course.
Yeah,
That's
I've
why
never used it.
that's why I don't pay a fee.
But
Yeah,
this is the thing. This is the thing about using apps. Period. Right. Like Cash App. Right. Cash App. I use that to purchase Bitcoin, but they charge a fee.
Mhm.
A lot of the apps will charge you a fee, but a lot of these other apps or brokerage firms do not charge a commission, do not charge a fee. So that's the other thing you have to be conscious of, or when you're using certain apps like Robinhood or Cash App, they are actually charging you a fee too. So,
But like Robinhood, for their purchases, for stock purchases, I don't think there's a fee involved. There's a fee involved if you buy Bitcoin, but if you use those apps for online trades, like I said, Fidelity doesn't charge a fee, Vanguard doesn't charge a
right,
fee.
that's what I'm
Just be
saying.
careful to make sure you read the fine print to understand, because I can't speak for what all those apps, what their policies and procedures are. I just know for a fact, Fidelity, when you use their app to to make purchases, you don't pay a commission.
Right. And that's where I want to make the distinction. Just know that you all. So there's no sense in when you can get it done, for free, a zero commission, because it may not sound like that much, but if you're paying a fee, that's money that you could be using to grow within your actually stock, or to purchase more stocks, or uh, to increase money that's going to be working for you.
Right.
So next week, you all, we're going to talk about researching and buying mutual funds. Now, a lot of people say, well, isn't that the same what we just did? No, it isn't. It is definitely different. And especially, it's going to be important for people who have these employee plans or IRAs, because most of those are like mutual funds, invested into mutual funds. And we're going to talk about how to understand that, how to research that, and also how to buy mutual funds. It is definitely different than buying an individual stock. It's almost some of the
Yeah.
things it's the same. Go ahead, Doug.
And Bob, that's something is key, because most of you, if you're still working and investing in your 401k plan, you have usually choices of different mutual funds. And so, again, you need to make the right choice there in order to make sure your money grows at optimally. So hopefully what we will provide will also help you decide which mutual funds you should use or you should choose in your 401k plan.
So tune in next week, the FITT Show, 8 p.m. Thursday. We here live and in color. So, Dope, once again, thank you so much for your wonderful expertise and knowledge. I am just blessed to know you and be beside you, my brother. So stay tuned, you all, and have a wonderful evening. And we look forward to seeing you next week. And remember, go out there on YouTube and subscribe to our channel so that we can actually expand our bandwidth and continue. Even when we're gone, you can go out there on Facebook and hit the like button and the heart button, because that helps us tremendously, tremendously. You all, we want to reach as many people as possible because we know this information is important. And you know what the old saying is, if you want to hide some information from people, put it in a book. So we try to put it so you don't even have to read it. All you got to do is listen. Thank y'all. Have a good evening, and we'll see you again next week.